Buddy, to the Day Trading Academy 22, day 22. Doesn't even feel like it's been 3 weeks, and we're on our 4th week already. So, starting off this week, we're going to be going over some of the concepts that we talked about last week, like order blocks, CISD. It's pretty much a part 2 to those 2 videos. I know some of you guys actually were confused, particularly one comment. That's why I'm making this video here. Again, guys, don't be afraid to comment in the comment down below. Let me know if you guys have any questions. That way, we can start plugging those videos in here. Okay. Care about you guys. I care about you guys' successes. And again, if you have any more questions about any of the concepts we talked about before, like anything that we've already talked about, join the free Discord. It's in the description down below. And yeah, I just wanted to talk about CISDs and order blocks. Okay. So you don't need to overcomplicate this. All right. A CISD is going to be change in the state of delivery. Okay. And we went over this in that video, right? CISD video. So CISD is basically going to be change in the state of delivery is basically going to be your order block formation. All right. I know some of you guys probably got confused with both of those videos being separate. I totally get it. Okay. Think of CISD, right? The change in the state of delivery. It's your order block formation. Think of this as the cherry on top of a break of structure or your market structure shift. Okay. It's basically all it is. It's going to tell you when order flow is potentially changing. Okay. And we'll go over some examples here, but that's all CISD is, guys. Okay. This is just a part 2 to those 2 videos. I just wanted to go over these 2 because of that particular comment left in one of those videos of last week. So I want to go over this before we move on to other things. I want to make sure you guys are understanding everything before we get into the more advanced stuff, because it's going to be pretty advanced and you guys are going to be like, damn, if you guys don't get any of this. Okay. So let's go over some examples real quick. All right. To get in depth with this shit. So, all right, let's go to the 1 hour time frame. Let's see if we can find, I know I've been using that price action lately, but let's go back here. Let's just go back in time because I've been using the same price action for a while. Okay, so let's see. All right, so let's start off. Let's see. I want to find a really good one because that was a CISD over there. I want to find a really, really good one. So that way you guys know what I'm really talking. I guess we'll go over that one then. We'll just go over this example here. All right. So you guys see the series of down close candles, right? 1, 2, 3, right? This is a swing high that caused that low, right? Three candle formation right here. 1, 2, 3, highest point of these 3 candles. That's your swing high, right? And then followed by that swing high, you have a series of down close candles, right? And what do these down close candles do? They swept liquidity, right? So this is your swing low, okay? So a CISD is going to happen when you get a body candle closure above the first candle of the series of down close candles, okay? It can work with 2 candles, it can work with 3 candles, etc. Okay? This is basically just an order block right here, right? The one down here. This is just one order block. Why? Because we closed the body above it. All right. So this is your order block. This can be an order block as well. But this is your change in the state of delivery. These 2 are a little more risky because you don't have a market structure shift. You don't have a higher high, right? Does that make sense, right? I hope it makes a little more sense now. These 2 would be considered like more high risk. All right. So once you get a body candle closure above this last or first down close candle of the series of candles that go lower, and then you get a body candle closure above the swing high, right? That was behind these series of down close candles. Well, then you have a confirmation of a break of structure and a potential change in the state of delivery because we closed a body above the opening price of this first candle that led the series of down close candles that swept liquidity. Does that make sense? Hope it does. So if we just drag this line out, you will see that this right here, even if I were like, you don't have to just use the opening price of this. You could also use just the full candle, right? I like using the opening price only because I like when price, for example, is just staying above the opening price of this, but you could definitely use the whole thing, right? So this would be pretty much your higher probability order block, okay? And this also would be your breaker block, right? Last up close candle of the swing high that takes out liquidity. Took out liquidity there, took out liquidity there. Okay, took out the external, took out the internal. So this is your breaker block. So you could also mark that out, right? I know I said I wasn't going to go over breaker blocks, but we're going over OBs and changing the state of delivery. Like I said, CISD is basically the cherry on top of a market structure shift. Okay. If you get a body candle closure above that first down close candle in this example here, we have a body candle closure above that and the swing high here, this internal one, we have a break of structure and a potential change in the state of delivery. As you guys can see, the breaker block, the order block that caused the change in state of delivery are holding. Okay. So when you have overlapping concepts or PD arrays, as I like to call them, when you have overlapping things like this paired with the fair value gap, it becomes a very high probability setup, right? Especially when you pair it with discount, right? With premium and discount, okay, of this little range right here. Why is this a new range? Swept low, made a new high, okay? So you have a fair value gap here paired with change in the state of delivery, paired with the break of structure, paired with the breaker block. You have a bunch of overlapping PD arrays, all right? So this will cause a high probability setup. As you guys can see, it sweeps these internal lows on the lower time frames. I'm on the 1 hour, and then we start pushing up, right? That is pretty much all a change in the state of delivery is, right? And then order block, all an order block is, like once you have your change in the state of delivery, any order block engulfed by the next bullish candle, this is an order block, a valid order block, okay? For example, none of these I would consider an order block. I would consider this one because this candle here closed the body above it, right? So this would be our order block, but it never got tapped into. And then this would be another order block because why? We closed above it, right? So if we tap into it, that could be an order block for a continuation for a draw on liquidity, right? So let's find a bearish CISD, okay? So this example here would be a bearish CISD, just right off the bat, right? We have a high and then we close the body below these two bullish candles, right? And below that low there. So this would be your CISD, right? That's your CISD. And also, what is it, guys? If you guys don't, I'm gonna give you guys 5 seconds. 5 seconds to tell me what that green candle is. 1, 2, 3, 4, 5. If you didn't say order block, you're not studying hard enough, all right? CISD is basically your order block formation. Okay, this is a bearish order block. All right, we close the body right at the low, which is okay. I'd like to see it close below the low, but right at the low is perfect. We close the body below that. We tap into it. We open high on this candle. We tap into it right there, and then we go lower. Okay, another cool thing you can do with order blocks and breaker blocks is you could take, I guess you could take your gone box and mark it out. And then as long as the candle doesn't get above, this is a neat trick, right? As long as the candle, this next one, doesn't get above the 50% level of this order block or breaker block, whatever you're using, as long as it doesn't close a body above it, you're good. If it closes a body above it, like for this example, if a candle were to close a body above this, it would most likely go higher, right? So that's an indication of maybe you should start to look to get out early, or maybe you should move your stop loss or tighten up that stop because maybe you're wrong, okay? Again, this game is a game of probabilities. This is not always going to work, but again, you're playing probabilities, right? And then we come up and tap it one more tap. We tap the low of it, right here, boom. We tap the low of it, you guys see that there? And then it goes lower, okay? And then also you could use this as another order block right there for continuation. Let's see if I find another one right here. Perfect example right here. Boom. Tap it. Did it get above the 50? It tapped the 50 perfectly, right? No body candle closures above it. And then we go and make a lower low and go to the draw on liquidity. Why is this a draw on liquidity, guys? I know we're kind of going over like everything here in this video, but mainly order blocks and CISDs, okay? So why is this a draw on liquidity? Displacement, right? The speed and displacement cleared out this high. We're going lower after clearing out that high. We come back, fair value gap in a premium of this small range to this low, right? Order block, premium of the order block. We don't close a body above the 50% of the order block, and then we go lower. And then what do we have after this? We have a change in the state of delivery, right? So order flow is switching, right? Order flow is switching. This is how you indicate if order flow is switching or not. It's basically the cherry on top of a market structure shift, right? You get your order block, you get your breaker blocks around the change in the state of delivery usually, right? And I just noticed this could be an order block as well. Why? We close the body above it. And this one actually gets tapped into, right? Boom, opening price, tap, tap, and then boom, we go off to the races. There you go. Down close candles, bullish order blocks, right? Will support price to go wherever it needs to go, wherever the drawn liquidity is, right? We take out this internal high, and we keep going up for the, never mind, we never took the external high there, but all right. So I want to give you guys a couple more examples here. So, all right, so our drawn liquidity is up here, right? Boom. And we just took out a bunch of internal highs, right? So we just took out a bunch of internal highs here, right? Relative equal highs there in this internal range. And we go lower, we're kind of just going sideways here. My change in the state of delivery would not be until we get a body candle closure here. And again, you have to incorporate time. Again, this is very important, and you guys will learn about this a little bit later in the academy. But like right here, I would not long this just because this is when market is going to close for futures, right? Futures, they close at 4 p.m. Eastern Standard Time. So I would not long this, but this is a change in the state of delivery because we closed a body above this candle's high, right? This candle, it could be one candle. We close below. So this is basically an order block formation, right? But I wouldn't long this because why? Because the market is closing right here. But as you guys could see, it ended up working out. We ended up taking this high again, making a higher high. And then we started going lower, okay? We went lower. We took out this low that made this internal high. It doesn't need to take these highs. These highs right here, these relative equal highs, let me take this out. These relative equal highs are internal highs, right? Price wanted to take that out, but it didn't. It's doing something else, right? It looked like it was coming into this low, but it didn't take that low for a reason. We're going to talk about that reason a little bit later in the academy, possibly even this week. But the external draw is up here. Price looked like he wanted to get up there multiple times, but it failed to do so. All right, these relative equal highs here, they're saving them, right? So we go lower, we close a body below this. So this is our order block right here, okay? So if you just mark out the gone box, right, you could use the whole candle. You don't need to just use the opening price. But we never closed a body above it. It's very important that you wait for candle closures, okay? We never closed a body above the 50% of this order block there, all right? And then what? We make another low. So this one right here is our change in the state of delivery. So is this one right here, right? Basically order block formations again. That's all CISD is. It's just order block formation. I don't want to confuse you guys. I hope I'm making myself like a little more, I hope I'm simplifying it a little more, right? CISD is basically an order block formation. That's all it is, okay? We break structure here, right? Opening price, last down close or last up close candle for a bearish order block. We come back up, we revisit it, right? Again, take out the gone box. Never closed a body above the 50%, right? If we close the body above the 50%, that would kind of freak me out a little bit. So I would consider maybe, tying up my stop or just waiting a little bit, right? But this is also a premium fair value gap right here. We tap that, CISD, OB, right? Same shit. Then we go lower, and then we push up to the external draw there, right? Why did we push up to the external draw? I'll let you guys. I'm gonna give you guys a little bit so that way you guys could just analyze this chart here. I'll give you a hint. It is right around here. Okay, find the CISD. I'll give you guys 10 seconds, right? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. All right. So if you didn't say that this was your change in the state of delivery, I don't know what to tell you, right? Because this is it right here. It doesn't need to like sweep major liquidity. It doesn't need to sweep external. It could sweep internal, which it did right here, right? Again, keep in mind, I'm on the 1 hour time frame. If you were to zoom in, this would be internal liquidity right here, right? This would be a swing low in the lower time frames, right? So we come down, we sweep liquidity, right? And then we push up, we close a body above this. And what's right here? What's right here, guys? You'll often find that breaker blocks are often paired with order blocks. Okay, that's a good sign, right? And then guess what? Your down close candle is supporting price, right? It's supporting price. It's basically using it as support. And then what? We push up to that external draw and these relative equal highs in the internal, right, of the internal range. So then we push up, we push up, we push up, boom, there you go. And then right here again, CISD up here, right? Again, this is your order blocks too, but these are a little more high risk because this is the first up close candle that caused new lows, right? Why is this a new low? This low right here, this internal swing low. We clear it, boom, we get above it, we tap back into it, into these candles right here, push up, make a higher high, take out this draw, right? Keep going, right? Right here, CISD. Again, you can use the whole candle, taps back into it, push down, right? That's all it is, guys. Again, OB right here, boom. Why? Because we close the body below it. Boom, drag it out, uses it as what? Resistance, push down, right? That's all it is, guys. It's not hard. It's really not hard, right? CISD right here, right? Again, you guys could use these as order blocks potentially, but again, they're a little more high risk because you don't have that breakup structure, you don't have that change in the state of delivery. We want to get above all the bearish candles right here, right? And guess what? Look, perfect. We use it as support. Boom. Look at the bodies, right? Remember, wicks do the damage, bodies tell the story, right? Bodies are being supported by this last, or the first, I always get confused. The first bearish candle that causes the new low, right? Boom. Being supported, price is being supported by it. And then we push up, higher high, right? Again, right here, change the state of delivery. Or order block. It's an order block formation. That's all it is. It's just an order block formation. It's just telling you that price is probably going to go higher and seek higher prices, right? That's all it's telling you, paired with the breaker right here, right? So this is your CISD, your order block formation. Again, this can be an order block too, but it's going to be a little more high risk, right? CISD, why? Close the body above it. We tap into it. This candle opens low. We tap into it, push up, right? Boom. Tap it again, push higher, right? And then we have another one right here. Like I could just keep going on and on and on, right? Boom, look at the bodies, boom, boom. That's why I like using opening prices. I don't really like using the whole candle. It's just a personal preference, but I like using the opening prices because I like when it's this clean, when you see the bodies respecting the opening price of that first down close candle or up close candle, whatever situation you're in. I actually like this a lot because the bodies are respecting that opening price, and then it pushes up. And then guess what? Guess what? Another order block right here, right? Taps into it perfectly, right? Look at that. Taps it perfectly. And then we push up. All right. And then guess what? Right here. What do we have right here? Bearish order block, right? Boom. Opens higher, taps into it, down. Okay. Let's see. I mean, I could just keep on going, to be honest, right here. Boom. We make this high, right? From this swing low to this swing high. Close bodies below it, and we just bounce around the opening price of this, and then we go lower, right? It's all it is, guys. I mean, I don't know how much more to simplify it for you guys, but it's really all it is. Again, right here, right? We sweep external right there. This is your CISD. Why? Because we close the body above it, right? Body above it. This candle opens pretty aggressive to the low side. But if you had your stop down here or below this candle's low, you wouldn't have got tapped. And then boom. But yeah, that is pretty much it, guys. The CISDs is basically just going to be your order block formation. And then I showed you guys, you know, you can use these order blocks as well. But again, they're going to be a little high risk because you don't have that change in the state of delivery. You're going against the current trend at whatever time it is. Does that make sense? I hope it makes more sense. I'll probably make a breaker block video tomorrow, a part 2, and show you guys, again, a little bit more breaker block examples if you guys want it. But I definitely wanted to make this video because I felt like this video, like the CISDs and OBs, were kind of confusing. Don't confuse the two. Change the state delivery is basically an order block formation. But yeah, hope you guys enjoyed day 22 of the Trading Academy. I'm enjoying making these videos for you guys. If you guys would, please subscribe. Like the video, helps me get out there. And yeah, join up the free chat of the Discord if you guys want to ask questions. I'm always in there. So catch you guys in the next video. Peace out.